Hey guys, TommyBryson here, and today I'll tell you exactly how mortgage rates basically influence your monthly payment when it comes to you buying a home and how much you're actually going to pay on a monthly basis. And by the way, a 1% or 2% difference is going to equal a lot of money whether you pay or basically save when it comes to interest, okay? Now, this video surprised me while I was making it because I had no idea that just 1% or 2% was actually going to basically cost you in the six-figure range. Meaning more than $100,000 is actually going to cost just 1% or 2% buying a modest average house, okay? But thankfully, if you're watching this video, for example, in 2021, in reality, mortgage rates are very low, so no worries there. However, because the mortgage rates are very low, in reality, houses are a lot more expensive, a lot more demand, and some people are actually going ahead and paying more than the house is actually worth. Do I recommend that? The answer is no, don't do that. Be patient and wait to buy a house that's appropriately priced and not going to cost you a ton more money over asking price, okay? Keep that in mind. Now, let's get started, guys, okay? If you guys are new here, I post videos every single day, so make sure to also subscribe and hit the bell so you're notified, and on top of also destroying the like button. Now, the very first thing, guys, I do want to tell you exactly how mortgage rates are set. The simple version, okay? And the overall idea is basically when the federal government says, hey, you know what? We're gonna cut rates. It means that basically banks can borrow money for less money, which then means they can go ahead and lend you money for less money also, which then goes ahead and influence the entire mortgage rates out there. On top of it, you have a lot of other factors, for example, like politics, the economics, and on top of that also like the whole like mortgage-backed bonds, okay? So that's also a few other things that influence it, but in reality, it is usually going to be the current federal rates and so on, okay? So usually that's what's going to influence your mortgage rates. But right now, again, 2021, mortgage rates are very, very low. And by the way, quick story here. Back in 1981, I think, guess what? Mortgage rates used to be around 18.63% at its highest. And the lowest we ever had it was basically back in January of 2021, by the way, at 2.65%. And by the way, guys, the crazy thing is this, okay? This is why you want to get a fixed rate mortgage, because basically a 2% difference on a variable rate can mean basically, hey, I can afford my payment to basically I can't afford it and now I'm going bankrupt and I can't afford anything here. So again, usually you want to get a fixed rate loan, because if you don't and rates change, it could mean, hey, just 1% or 2% could mean an extra, for example, $500 per month. And that could be a ton of money to the point where, hey, I can no longer afford to actually pay for this. So keep that in mind here. Now, the second thing I do want to say, guys, is basically whenever you are about to close on a property, remember, they're supposed to give you a loan estimate letter that will tell you exactly how much the bank is going to make and also what your payments are going to be, and on top of that also what the closing costs are actually going to be also. So you always want to go and ask for this letter when you're about to close on the property. And the idea is that this letter right here looks like this. But the idea is, guys, that this letter right here, by the way, I'll put a link down below so you can actually see it. But overall, this letter right here will tell you exactly how much money the bank is going to make. So right here, on a loan of $162,000, page 3 here, the entire bank is going to make around almost a 70% profit. That's how crazy this actually is. So again, you borrow money, but the bank is going to make a lot of money no matter if this charge you, for example, just 4% or 5%. The bank is going to make a ton of money on their money. And that's why houses are such a lucrative investment when it comes to banks, and that's why they don't care about offering for you, for example, like a 1% discount or anything like that, because really, they're still gonna make a ton more money. So always look for this letter right here to tell you exactly how much money you'll pay, how much money they'll make. And by the way, guys, okay, in 5 years, this person right here will pay $15K towards the capital, the money they borrowed, but around $56,000 in total. So in reality, they would pay an extra, for example, $35,000 just to the bank in interest. That's it, okay? That's how crazy the profits the bank actually make actually are, okay? So keep in mind that, okay? So now, let's go into detail to see exactly how maybe 2% difference can affect your mortgage payments just like that, okay? That's how crazy this actually is. And by the way, guys, okay, the average home in 2020 sold for nearly $400,000. A real fact, okay? The average home in 2020 sold for around $394,000. $300,000, a lot of money. But now, let's say for example, hey, you know what? I'm not gonna buy that type of home. I'm gonna buy, for example, a $300,000 property. That's all I want, okay? That's all the house I want. So if we're gonna go ahead and say, hey, I'm gonna buy a $300,000 property. I'm gonna put down, for example, 3.5%, okay? Not that much money at all. I don't recommend it, but that's all you have, that's what you're gonna do. You also get, for example, a 30-year mortgage, and on top of that, let's say your interest rate is going to just be, for example, 3%. You got a very good rate. Now, what exactly does this mean? It means you're going to be paying around $1,220 just in interest and capital payments. But overall, with the taxes, insurance, and everything else, it should be somewhere around $1,484. But again, we're only worried about our actual mortgage and what we're actually gonna pay the bank. This is how crazy this actually is. And by the way, guys, okay, just so you guys know, okay, you're not paying all that money towards a loan. In reality, no. You're paying basically $496 towards the principal, and the bank is keeping, for example, $723 basically towards the actual interest they actually make. So basically, they profit $700 while you only pay them back $500. Basically, a ton of money if you ask me. However, that's not all, okay? Let's say you couldn't get a great rate, and you basically have to get it, for example, for 5%. What would be the difference here? Well, in reality, you go from basically $1,200 to now you're paying around $1,554. And by the way, that is a $334 per month difference over a 30-year period. And you might say, Tommy, well, $334 is not that much money a month. No big deal. I really don't care. But it is a big deal. And here's why. Because again, if you're paying $334 every single month extra, guys, okay, in 1 year, that's going to be around $4,000. But over a 30-year period, how much money is that, guys? Okay, well, multiply by 30, that's going to be an extra $120,000. So that's how basically just a 2% difference can influence how much money the bank actually makes. It makes a massive difference. And that's why sometimes you might just say, hey, if I have such a high rate, I might just want to go ahead and refinance, and that way I'm good to go. But sometimes you might want to keep it. It all depends. But basically, the interest rate you're going to pay is going to mean a lot. Now, guys, I do want to go into more detail here, okay? Because I want to show you guys everything so that way you guys know exactly how this actually works, okay? By the way, my wrist hurts. I don't know why. Probably working at the gym. But overall, guys, okay, imagine this, okay? If you get this loan at a 5% interest rate, right? What does this mean overall? How much money will you go ahead and actually pay the bank? Well, in reality, we're back here, 5%, right? Let's scroll all the way down to basically 30 years, okay? 30 years of payments. You have payments, principal, and interest, okay? Let's scroll all the way down 30 years later. Well, in total, you paid $559,000 overall. And remember, okay, the house is only worth around $300K. On top of that, okay, you paid back their money of around $289K, but they get to make from you $270,000 just in profit. That's how crazy this 5%, just 2% difference actually is. However, though, let's say you got it, for example, at a 3% interest rate, guys, just to show you. Well, in reality, you go from paying $270, remember, right? $270 to now where you're only paying, let's go all the way down here. This is 30 years of payments, okay? A lot of payments. To paying only around $150K in interest. So basically, you got to save around $120,000 right here, $120,000. You get to save that much money in those like 30 years, okay? It's a lot of money you could have in your pocket or basically just invest in, okay? So just for fun, guys, okay? Let's say you say, you know what, Tommy, I'm going to invest a difference of $334. Again, $334 multiplied by 12, that's around $4,000 every single year. So if you invested that money, guys, okay, $4,008, every single dollar counts, okay? And you invested it for 30 years, the same life of the mortgage, okay? The extra money you're paying. In reality, at a 10% return, how much money would you have? Guess, okay? Comment down below, let me know, and then I'll click calculate, okay? You guessed? All right, pause the video, whatever. Now calculate, okay? You would have around $783 $125,000 in your investments. This is basically how expensive this actually is. And that's why usually you want to be very, very careful when it comes to basically how much interest you're going to pay the bank. Because in reality, it can cost you a ton of money. However, if I were to buy a house, I would always follow these rules right here. Okay, what I would want to do is say, okay, I'm going to buy a home, but instead of putting down, for example, 3.5%, I'm going to put down 20%. On top of that, I'm going to get this on a 15-year mortgage. What happens here is this, guys, okay? I go from paying so much money to only paying around, well, I'm paying a lot more money, obviously, right? Like around $1,657. But in reality, look how much money they're actually going to make in interest payments. Okay, remember, on a 3% it was $150. On a 5% was basically $270. Okay, but on a 30-year mortgage. However, on a 15-year mortgage, you're only going to pay around $58,000. A big, massive difference. On top of that, if you pay extra towards the mortgage, my rule is basically, maybe say, for example, you pay an extra $500 per month towards the mortgage. In reality, do you know how much money they're actually going to make? Not that much. When you scroll all the way down, they're only going to make around $41,000 instead of, for example, in the $50,000, okay? That's how cool this actually is. And on top of that, you get to finish a mortgage a lot faster. So overall, if you ask me, guys, in order to make sure you get the best rates, you have to make sure, A, you put down a hefty down payment, a good amount of down payments. On top of that, you have a good payment history, meaning, hey, I pay my debts on time. Whether that's, for example, your phone bill or whatever bills you actually have. It doesn't have to be, for example, with your credit card and all that stuff. It can be just, for example, your payment history with your rent and so on and so on. On top of that, if you do have a credit score, you want to make sure you have a decent, good credit score. But overall, you want to make sure when you're actually going to get a mortgage, you want to make sure you stand the best chance to get a decent rate. That way, you save a ton of money. For me, that's going to be on a 15-year mortgage. Put it down 20%. That way I save even more money. Imagine, for example, spending $270 and only spending, for example, $60K with basically a 15-year mortgage. It is a big difference. But overall, guys, that's how the bank can make a ton of money from you just by charging you an extra 1% or maybe just 2%. A lot more right there. But guys, comment down below and let me know exactly what do you think about the bank basically making 70% or basically half of the money they actually lent you. Well, 100% of the money. Comment down below. Let me know what you think about this video. I'll see you guys tomorrow. As always, like, subscribe, hit the bell so you're notified. If you want to text me or call me, join my Patreon, link down below, or send me a DM on Instagram at TommyBryson. And before I go, if you want another video, guys, well, here's that video right here, and click my face right here. See you guys tomorrow, and as always, peace.